recording for today's session. I think this is good. This is good. I think in the last few weeks, I'm really excited that we talk about trade setups, and I want to hear you take trades as well, because that's what it's about, right? We talk about these setups, and when they give us opportunities, boom, we take those opportunities. So let's go over like what trade you took. Like let's what ticker should I pull up?
Yeah, so I took one trade on QQQ.
Okay.
And then I entered on the 15th at the end of the day, around 12:30. There was a skinny hammer, you can call it, right there.
Okay.
Yeah, that is where I entered.
So I have a question for you,
Yeah.
because I want to understand how you think, right? So uh, please do not take this as you did something wrong, right? I'm just trying to understand. So if we have an uptrend, we have a pullback at an area of value, and we have an uptrend, this is our area of value, and this is where I want to see a hammer.
Yeah.
Okay, so this is what we've been talking about as a lesson, right?
Mm-hmm.
Are we good on that one?
Yeah.
Okay, so now when I see this hammer, it is not coming at a pullback, right? It's at a some consolidation. So I want to understand your thought process.
Yeah. So there's kind of two approaches I took. When I was looking at it, it did look like an area of value because the next couple of bars hadn't they hadn't fully developed yet. So when I was looking at it on that day, all I could see was the hammer when I was looking at it, and from my perspective, that kind of looked like when I was looking at it that day, it looked like an area of value on its own, without the following bar kind of really developing. And then the next day, of course, you see that it's actually more of a continuation than a pullback. So yes, I definitely agree with you there. But in the moment in time, I just didn't see it. And surprisingly, I actually wanted um, to enter a little sooner, um, but I just wanted to see where that plays out a little bit further. Really, I should have entered um, potentially even sooner in that consolidation zone down below in the
This
valley,
down
in
here?
that in that pullback. Yeah,
Yeah.
but I just
Okay.
didn't get a bar chart that I wanted, because I wanted either a hammer if I wanted to go up, or some kind of railroad track, or um, engulfing, and it didn't really give me a strong one that I felt comfortable with. So that's why I waited a little bit, and then just a couple hours later, it gave me that hammer. So I decided to take it.
Okay. So let's talk about this whole setup. So this is Tuesday,
Yeah.
last week Tuesday, when we said if price comes down here, it's a potential
Mhm.
area of value where we go up, or
Yeah.
if it breaks above here is where we go up, right? So those
Yeah.
were the two conditions that we set up. This
Yeah.
hammer comes at this break of this, right? So
Yeah.
from that perspective, you can say, yes, I'm at an area of value. I broke that. Uh, but to me, I the hammer is not really my signal. The signal is I'm breaking above this line. I am not closing below it. I'm staying above it, right?
Mm.
So this bar broke it, but that didn't close. This next bar broke it and it closed above. This hammer bar remained above, the next bar remained above, right? So there was no going back below this area of value. So to me, as a short term, when I drew this line, I was not going to wait, right? When I break this line, at least if I don't do it this bar, the next bar, because I close above it, I'm taking that trade.
Yeah.
Now, you and I took the trade at the same place because of where the two hammers closed, right? But just the thought process I want us to go through, right? It should not be haphazard. You've put some thought process, which I'm happy that you did that way, right? So you thought about it and you took the trigger. Down here, as an area of value, the only way you could have said this is an area of value is if you draw a fib in this short-term upswing, and you say I come down to that 38.2. That is my area of value, which also aligns with this 38.2. Right? So you can say that's my area of value. So that's why I removed the drawing, not to remove clutter, because I already know this is my line. And so we get, up here we have one engulfing, which would have given you a little bit sooner entry than here. And I don't see a hammer, but then you have here almost an engulfing, again another sooner entry to take the trade. That's this down here. But up here, you break above this, fantastic. So, okay, so you took this trade, again, no complaints, just understanding thought process, right? And did you journal it?
I did. I actually didn't. I did not sell either since I wanted to see, and I forgot a little bit, unfortunately, as the week carried on. But thankfully, it's in the positive. So
well,
it's a huge gain.
So let's talk about that, right? Let's talk about that.
Yeah.
So here's your entry.
Yeah.
Here's your entry. Where was your stop?
My stop, 1 sec. It was at 2x. So
your stop?
Or sorry, no. No. My stop was right pretty much like that below
This
that.
area here?
I actually did not. I actually had my stop pretty tight because this is like moving up when I know historically like our bias is on the downside. So I said the bottom of that bar of that hammer a little bit below. Yeah, that's where I had my stop.
So I can understand you correctly. You said we're in a downward bias. I take this trade. If I'm wrong, I want to be wrong quickly because I'm in a downward bias. Is that what I heard you say?
Exactly.
Beautiful. Yeah. That's exactly the kind of thinking I want you to put in place, right? So personally, I would have put it down here, but again, it's not about being right and wrong in this instances, right? It's as long as you have intentionally put the stop there, right? It's not haphazard. As long as it's intentional, that's fantastic. And so from here, you said 2x. So here's your entry. Here's your stop. So 2x is here. So we draw this because this was our entry. You would have been out the next day already, at least some part of your position. Correct?
Yeah.
But you do not set the exit on the top side, so you're still in the trade.
Yeah.
Okay. One of these days, you'll get burned, and then it'll be a good lesson for you, right? Because you're getting burned on paper trading, so that's fine.
Yeah.
You should always, if as soon as you enter, you should have your exit in place, top and bottom. Always.
Yeah.
Right? You walk away, 50% of your position, you've already taken profit. Right? And at that time, you move your stop. From here, you move it slightly above your entry. Right? And you can walk away because even if price comes down, this is a profitable position for you. yes, it worked in your favor this time. Did you consider this supply zone?
I did actually. Unfortunately, I ended up not seeing it. I did set my reminders and everything, but it by the time it was hitting that supply zone, it already had blown through it and already reversed a little bit. And I actually had kind of two sets of supply zones. I looked at that one and the one above it, kind of like how you have it drawn right now, actually.
Yeah, yeah,
There's one like right, I don't know if you'd call those like the same almost between the first and second supply zone. Yeah, right there. I'd drawn
yeah.
that as
I would
well.
just say to me, is that too close? So I just draw. If I have these two, I'm good enough.
Yeah.
But that you're right, right? That's not wrong if you consider this a supply zone. Now the
Hmm.
thing is, if you have a supply zone, it tells you again you have to take your exit, right?
Yeah.
Even if
Yeah.
you say I don't take it at 2x, I take it as soon as I hit my supply zone. You have 2.5 to 1 ratio, right? This is a
Hmm.
fantastic ratio, and
Yeah.
you've moved your stop, and the next one is you're targeting up here,
Hmm.
which is good. So another thing you should start doing is when you move your stop, right? You hit your target and you move your stop to slightly above entry, and then price makes a new high. Move your stop, move your stop again, because now you really want even the second half to be really profitable, right? So you can move it to down here, or you can move it the same thinking and say, look, if I come back down, up here, if I come back down below this supply zone again, I'd give it a little bit of wiggle room. If I come back down, I'm out. But you're now trailing your stop. If price gets up here, you're either taking another 50% off, or your stop is really starting to get tighter, right? So you had a beautiful trade. You still do. We don't know what's going to happen tomorrow morning,
Yeah.
right? That's why never. So part of the lesson: never, never, never give back gains. Never. Your 2x gain is not one you need to give up, right? So make sure you are booking profits.
Yeah.
Okay. But I like it. I like your trade. I like your trade. I just want to keep talking about those possibilities as we talk about them.
Yeah. No,
Okay.
thanks, Benny. This is helpful.
Yeah. Anything else about this specific trade you want to talk about?
I mean, the only thing I wanted to just kind of get your thoughts on it is kind of what do you think about this, like just all of a sudden huge jump to the upside, considering, everything that's going on, all the pressures and from a macro perspective, all the like our bias. Of course, we play to the chart, right? We don't play to our bias. We just play whatever the chart gives us. But wanted to get your kind of thoughts on with everything happening right now. What do you think of this, like, sudden move to the upside? Do you think this is just a fake out, or do you think we're potentially maybe reversing because we see kind of a couple higher highs right there, right before we get to this peak, um, and then now potentially, depending um, on how we do the rest of the week, potentially we might blow through this current fib that we have and blow through that supply zone that we have. So I wanted to just get your general thoughts on that.
Yeah. So we're at this supply zone. We have this coming up. We have this coming up, and then we can keep going, right? And also this current upswing here, the target has this negative 272, which aligns with a supply zone up here,
Mm.
right? So it's possible that we can continue to go up here. Right now, the markets, right? If you think about the macroeconomics conditions, with even new layoffs coming up, with bank situations coming up, I don't think we're done going down. I don't think it's fully priced in yet. I think it's like you know how recently in June we went from 270 to 333. So if we measure that, if we measure this move and we calculate it from this move here, we're gonna come back to that same area, right? Because we're almost at the same area, so we're gonna come back to that area. So I don't think we're done yet, but you know, only time will tell. We take positions cautiously. We have this long term this long term uptrend still intact. So you can say this 618 held and we're gonna go back north. Right? That's part of the narrative. And then short term we have this this downward pressure. Let's just do this. Right? So this short term we have this downward pressure, and this has not cleared the 78.6. It's kind of hard to see because it's overlapping with the other fib, but the 78.6 has not cleared. So again, that aligns with this supply zone. It's not the supply zone we saw earlier, which is this one, but next one higher. Right? It's aligning to that. So it's possible we can still move there, or we can move all the way to this new supply zone, which I think it's not a bad idea. We draw this supply zone right now. That's not a bad idea. Daily supply, right? So it's good. So we have this area. We have our target from this current upswing. We have that target. We have a couple of supply zones that could act as really strong resistance, which I say strong because this one was not strong. It held for a little bit and then price is going up. Another reason why you need to book profits quickly is Powell is speaking tomorrow.
Yeah.
You don't know which way it's going to go, right? Hopefully, tomorrow morning price pops. Book. If I were you and I missed that 50% initial position, I book 75% right now. Because 50% was somewhere here, or at the very latest somewhere here when we were at the supply zone. You didn't take that. Price gave you some additional blessing. Now, book those profits, right? Book those profits. Even if it's paper trading, treat it like real money. Because that's how you start to have the mindset.
Yeah.
So you pop, you take exit. You drop, you take exit. Either way, you know, you take some portion of your trade off the table. But then, you know, we have supply zones waiting for us.
Yeah.
So let's see what Powell says tomorrow.
Okay.
Okay. Did you take any other trade?
No, this is the one. I looked at SPY as
Yeah.
well, and then I just for this one I wasn't as prepped, so I just decided to go through the Q1 that I felt gave me a stronger signal for me
Okay.
to take that one. So I just focused on just the Qs.
Okay. So it's good. Last week we said if price comes down to this demand zone, we will take a trade. There was another demand zone here. Price actually came to that demand zone and created those railroad tracks and also sideways movement consolidation. So this was a very good entry. This is actually a very good entry from the perspective also of very, very tight stop. Because you just have to go below here. Right? If you say, okay, I want to give it more wiggle room, you can go below this 78.6, or you can just say below here. And then your 2x move right? Right here, comes down on Thursday. You enter the trade Wednesday. Thursday, you have your 2x move. And then you move your stop a little bit higher. Let's move this out of the way. So when you take your exit, this is the day you take your exit.
Yeah.
And here was your entry, so you put your stop a little bit above your entry. It came down close enough, but then boom. Here's a chance to take off another 25%. Like at the open of today is where you take another 25% off. But the setup was there, right? So the preparation comes the day before, the week before, as we did, having these areas identified. If this happens, I do this, which we did.
Yeah.
Right? In the cues, it gave us a good indication. If this happens up, if this happens up down here, right? So it gave us those two. Or if this breaks, we can, from here to here, we take it. I think we talked about that.
Yeah.
In the spies, here was Tuesday. We could have said, if this breaks, we take a trade. But look at the difference. In the cues, you have high, higher, low, higher, high. Then we drew it. In the spies, you didn't have that. You have, well, maybe you did. Maybe you did. Maybe you have a high, higher, low, higher, high. Maybe we could have also taken a trade here.
Yeah.
This one, the only reason I would skip something like this is when you get a very big bar, right? Could that be an exhaustion? In the cues, at the entry, before entry, we didn't get that big bar, right? So price pulled back a little bit, and then we got that big bar after our entry. But in the spies, unless you took the entry sooner, right? And this came before this. So that's why this is almost like chasing. In the cues, this did not come. It just went up from here. Even if you have a similar demand zone here, right? Similar demand zone here, but it did not come here. In the SPY, this came first. Because this came first, you don't take this trade because it becomes chasing, right? You take this trade. If you want to take this trade, you wait for it to pull back, and then at the break of this consolidation, you take this trade up here. Right? Almost same entry, but better success rate.
Yeah.
So
no, that makes sense.
Yeah, that's how we prepare. Okay, so now let's remove our drawings, right? Because these actions have already happened. What's next? Right? What's next? In the queues, we've already talked about it. There's no new entry for you, right? It's an exit strategy for you. You should have your stop no lower than this area here. Is your stop, and you're booking profits for the queues. So there's no new entry. Now, if you come up here and we get an upside down hammer, this is when we're going to go to the downside. So you book your profits, you get an upside down hammer, you can target to the downside. Yeah. Oh, one more thing I wanted to show you on the spies. Actually, I wrote it down when I saw it so I don't forget about it. From this low to this low, price is going down, but your stochastic is going up, right? So again, this gives you that confidence. When we're at this demand zone, I can take it to the upside.
Yeah.
Right. So this is critical. So I drew it, so I wanted to remember to show you that. Right. This is your last bit of confirmation if you want it. we made lower low but higher low in our oscillator.
All right. So you're looking at the bottom side on the chart as well, right? Yeah.
Low to low, I look bottom side. High to high, I
Okay.
look top side.
Yeah. Okay.
Right? And now another area to be cautious.
Yeah. Yeah.
Okay?
Mm.
Another
Okay.
area to be cautious.
Yeah.
That's why you start to book profits. It doesn't mean you immediately reverse, but if here we have our supply zone, we have our supply zone. We're touching that supply zone. So be cautious because it's already giving you an indication. Right? Your entry here. Look at this. Look at this. And look at this. They're going in opposite direction.
Yeah.
So hopefully it will still be in your favor. You get a pop at least 75%. And write down in your journaling, I missed my exit one because I did not pay attention. Like you should write those things, then it will help you understand what you need to look for the next time you take a trade.
Yeah.
Yeah.
Okay.
So we have this supply zone we have to worry about. So to me, this is a potential area here for the downside.
How do you reconcile that with your fib? I'm curious because we were on this fib is pointing towards, so it's kind of an upward trend fib.
So you have the long term is uptrend, right?
Yeah.
So, and then we have this downtrend.
Okay.
We have this recent downtrend. We have not cleared the 78.6.
Yeah. Okay.
Within this downtrend, we have a recent uptrend because we have a series of higher highs and higher lows. So we can't ignore that.
Yeah.
So within this downtrend, we have an uptrend, but we have not yet cleared the 78.6 of this downtrend. When we clear that, then we say we're done with the downtrend. But we're way below it, right? We're way below it. We came up to it, tagged it, and then we collapsed. So that's how you reconcile those different fibs.
Yeah. So you're just taking a shot at the temporary move, so you don't, so you can take advantage of it, even though your hourly technically is still on that downtrend.
Yeah.
Okay.
Exactly.
Yeah, because I was gonna ask too, because sometimes even the hourly can get a little extended in terms of how big the fib is. So
yeah.
Okay, that makes sense.
Now you can say, I don't want to take reversals. You always told me not to take reversals. So I would agree with you. Like this is a downtrend, right? This is a downtrend. So we're been taking the opposite side. That's what we've been doing. But in that longer term downtrend, we have an uptrend. So we're just capitalizing on that. Right? In that longer term downtrend, we have an uptrend.
Yeah.
We have an uptrend, series of higher highs and higher lows. So we don't want to ignore those. We take them. Now, where we are more serious is when we count. See how we're making lower highs, even though we're in a series of uptrend, but we're making lower highs. So again, supply zone, I'm taking to the downside. So here's an entry for you, right? You exit if you're in a trade, you exit, but because we have not cleared 78.6, you exit and then you play it to the downside because that's where our bias is.
Yeah, that makes a lot of sense.
Okay. So we have our setup ready. Right? We're playing it to the downside. Now if you really want to play to the upside and say, look, I'm gonna go back to the 78.6, I wanna take another shot at that, here's what that setup looks like. You blow through this supply zone and it acts as support. By blow through, it could mean it goes there, comes back down, goes back up above, right? It's not just straight shot. But at least once it clears it, it uses it as support. You get a hammer here, then you can target your 78.6.
Yeah.
Right? Don't take a new trade tomorrow. Until Powell speaks.
Oh, okay. Yeah, definitely. Until Powell speaks.
Yeah.
No matter what happens, except by selling.
you exit.
Yeah.
You move your stop way up high.
Yeah.
And then let him do his thing. Because you have 25% position, right, in your Qs. So if he takes the market to the next level, to the 78.6, that's a lot more profit for you. Right? That's like 4 or 5x your money. That's why I don't want you to exit fully.
Okay.
Put a good stop. But I need you to exit a good portion.
Yeah.
It's a discipline, right? It's a discipline, right? We need to remove greed. The discipline is at 2x, we're removing 50%. Right? If it's not 2x, then it's a logical area that's a little bit more or a little bit less, right? Sometimes it's less. But at that logical area, we said we're exiting. So you missed the first supply zone. We're above that supply zone. Again, you still haven't taken profit. So tomorrow morning, no matter what happens, up or down, book your profit, move your stop tighter, and see what happens. You might get a good move to the upside or to the downside.
Yeah, I was almost even thinking, I mean, this might be worth just selling even at 100%, considering Powell speaking. Normally, I would leave a runner, in these scenarios, but is it even like worth taking a risk at this point, considering I've already more than 2x my profit?
Yes, because you're only doing that with 25%. You're removing 75%. And you're moving your stop up. It's not going to make the price jump. Right? It's going to go through your stop first. So let's go here. Your entry. Right? Let's just be really. I think this was your entry. Yes. So here's your entry. Right? So you missed this exit. You're up here. Your stop now, let's just use this as a stop, is somewhere here. That stop should be about 2x. Because this was your stop. It's actually 2.5x. So you still, instead of exiting everything, you're still giving yourself a chance in case he's taking it to the upside. If he doesn't, your 25% is as better than 2.5. Right? So that's why you can take a chance. Now, if he was speaking at 5:30 a.m. and we were having this conversation at 12:30 p.m. the day before, I would say exit everything right now. Because when he speaks, there could be a very big gap down.
Yeah.
But he's going to speak in the middle of the day. So all the bias right now is to the upside until he says something, because people are just guessing. So take advantage of it. That's my recommendation. If you take 100% exit, you are not wrong. But just as how I approach it, how I think about it, is I have nothing to lose by doing this.
Okay.
Yeah. Okay. So I think we have a good setup. I want price to come up here so I can take it to the downside, because that's where my bias is. To the upside, this is what happens. But if price closes this, so this is this original one. So let's just move this to the side. This is my original entry. Price comes up here to this supply zone and reverses. This is where I'm taking a trade to the downside.
Would you wait until it clears that supply zone to go enter the downside?
Explain to me what you mean by clear.
Kind of where you have your supply zone, the bottom. Do you expect the price to go towards somewhere in the body of the supply zone, then come back, and that's how you would judge if it's an entry to the downside?
What I want is a hammer. If I get a hammer, I'm taking the trade. And
even if it's
this hammer could be higher, doesn't matter. It's not about clearing. If the hammer is, that's why I like it to stand out by itself. If that inverted hammer is standing out by itself, if the wick is by itself hanging, it's saying there's downward pressure. Like this one, the wick is at the bottom hanging by itself, saying there's upward pressure. So if I see this, there's no reason for me to wait. The more I wait, the wider my stop. Right? If I'm confident, I'm biased to the downside. Price comes here, gives me a nice inverted hammer. If I take it, my stop is right above that hammer. If I wait down here, my stop is still right above that hammer. I don't want to wait that long. If I'm wrong quickly. Yeah.
Okay.
Again, I don't take trades tomorrow.
Yeah.
Until I know what he's, after everything settles. Right? For half hour, it just goes up, down, sideways, and once it settles, then I can take a trade.
Yeah.
Yeah.
Okay.
So that's where we are.
Yeah, looking forward to it. Yeah. Should be a exciting day in the market tomorrow.
Yes. Let's see. Okay, any specific questions?
No, I think that's pretty much it for today. Just wanted to mainly go over the trade, and looks like this was a 2 out of 2 in terms of in the green of paper trading 2 weeks in a row. So pretty happy about that. But
so 2 out of 2. Which trade was the other one?
The Apple one that eventually turned green.
Oh, so your stop never hit? I thought your stop hit.
It did, but I never I didn't actually sell. Unfortunately, I have a bad habit of holding on to it too much, so I ended up actually letting it run, and then it reversed to the upside after my stop hit. I didn't set the stop loss. I had a notification, but I forgot to take the actual exit.
Okay. So I think let's talk about that. It's important to talk about that, because let's say in this trade you had the stop here, but it was an alert and you don't take action. Look where it went, all the way down, right? So as a habit, your stop and your first exit are put in place before you get up from that trade. Before you walk away, those are set up.
Yeah.
Because you don't know, right? It's otherwise it's a guessing game.
Mm.
I think you took a trade up here. Yes, this is the trade you took.
Yeah.
Your
I
stop
remember.
was supposed to be here. It went all the way here. What if it never reversed? Right? That's a bad habit. Let's get
Yeah.
the habit out of the way during paper trading.
Mm.
Yes, eventually you're right, but you don't know that. You don't know that here, right? You have no way of knowing.
Mm.
So
Yeah.
let's just get in the right habit. Now,
Yeah.
if you say my stops are wider, that's fine. But that wasn't your case. Your case was your stop was here. You just didn't take the stop. So your
Yeah.
stop should not be a mental stop. I think you should just be set it up. Go.
Yeah. Definitely. I think I'm definitely going to start doing that now. I think the biggest thing really for me was by the time the stop hit, it was, end of day on, what is that, Wednesday? And then Thursday, it reversed right away. So for this time, it worked out in my favor, but I agree. This could have very easily been just tumbled down to zero and would have
Yeah.
lost everything.
It
So
would have been a
gotta be,
disaster.
yeah,
Yeah. So it, did you book profit?
I did. Yeah,
Okay.
I
At
booked a
least you did
profit.
that. At least you did that. So,
Yeah,
but let's
that's
just
funny.
get in the habit of exiting. Uh, and part of the learning with your stops is you might
Mm,
say initially you might have your stop here, and with time, and with time I mean like once you get to know the ticker. That's why I only trade these three for like regular trading because I understand
mm,
how they move. Once you understand, right, so you might say, you know what, I need wider stops for up because I know that's how the stop moves. That's okay.
mm,
But unless you start taking your stops, you don't know. If every
yeah,
time you stop, price moves another dollar down and then reverses, then now you have in your journal you know why, and so
mm,
you widen your stop by a dollar, and then you'll hit your target. So, but
yeah,
unless you take those exits, you don't know,
yeah,
right? So you must take those exits.
yeah.
But this spy trade, uh, you have not the spy, the Q trade. The
You.
Qs, you have a good entry. I like your entry. I just don't like you don't have an exit, right?
Yeah.
You're not trading, right? You're kind of investing now. Now, like you're mixing
Yeah.
your two hats. You want to trade, but you want to put on the investment hat on, right? So those two don't mix.
Yeah.
Yeah.
Yeah, definitely something I'm going to start working on. I think the biggest thing for me is, being sure that I have that 2 minutes, top of the hour or bottom of the hour or whatever makes the most sense to actually go look at the chart. Sometimes I've been just super busy at work, so when I look, it's already like 3 hours have gone by, and sometimes it's usually in the afternoon where I have a little bit more free time, so it already is past market close. So that's been something that I've been trying to adjust a little bit, even setting up just some reminders on my calendar to just be like, hey, go check your chart, even if it's like for 1 minute at the end of the hour. So that's something I'm gonna start focusing on.
Yeah, bottom of the hour is better because the market's open at 6:30 for us. So
Yeah.
1 hour bar, it's at the bottom of the hour, right? So
Mm,
just
okay.
just see it close. So 7:29 to 7:31, for example, is a good window. But the other thing to avoid any of this, like the type of work we do, there's no guarantee that the next hour I'll have time, right? I might be in a meeting or something.
Yeah.
So the only way to avoid that is I set exits on both sides and I'm done. I don't have to worry about it. Even with options, I can guess what the option price is when that 2x move happens. And I'll just set my exit. I walk away. When I come back, if the price movement has happened, I'm already out of that trade.
Yeah.
So just think about that.
Yeah, it's actually, you bring up a really good point, because so far I've only been paper trading, but when you think about it, it's going to be hard to guess what the exit price is going to be in options, because it's not, we're not talking about like SPY's price. We're talking about the option price for SPY. So how do you calculate that? Actually, that's how would you go about guessing, I guess, for that one?
That's another
Probably a
day.
discussion for another time.
It's a long discussion, right? Because options
Yeah.
have different Greeks.
Yeah.
There's the delta, which says how much the option price moves in your favor for every dollar move of the underlying. And then there's gamma, which says how much the delta will change based on price movement. So if a delta 50 could quickly become a delta 60, which means even better for you as an exit. Then there's theta, which says how much time you have left, and theta actually decreases the value of the option as time passes. So you could be at the same price 3 hours in a row, and option price starts to drop because every hour that passes by, theta decay is going to take effect. Then there's vega, which is volatility. So there's a lot of things that go into that calculation.
Yeah.
Yeah.
Okay.
I would not worry about that for now. For now, your goal is to understand how price moves, to understand how the structure works. Once you become very good at identifying entries and exits, the next step is how do I maximize using options? Because you have to select the right strike price, the right time, expiration date, that is. And then how do you set your exits properly? I set mine a little bit more conservative. I calculate them and I set them, maybe 5-10 cents below what I calculate, because maybe it happens next hour, or maybe it happens 3 hours, 4 hours later. So that's why I give myself a little bit of room. Yeah.
Do you ever just use the chart and then just have alerts on the chart that tells you to exit the option instead of the actual option price? Or
I do that a lot especially on the stop side.
okay, on the stock side?
On the stop
Okay.
side.
On the stop side. On the stop
Yes.
side. Okay.
Yes.
Yeah.
Yeah.
Yeah. That would make sense. Okay.
But like in an option trade, if I enter a trade and I want to get out the same day, before I enter the trade, I will look at my calendar and say, can I monitor this trade? Right? Do I have 12 minutes throughout the day for this trade? If I don't have those 12 minutes, I'm not taking that trade.
No.
Right? 12 minutes is not in a row. I need 2 minutes every hour. But even if I can't, like if I have 10 minutes, not 12, if that 10 minutes is not up front, if it's at the back end, I'm not taking the trade. That's why I need those 12 minutes.
Okay.
That's what I mean by I'm going to skip this trade because I can't monitor it.
Okay. Sounds good.
Okay, I think that's good for today.